Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, what looks like it was a pretty uneventful day. There was definitely a lot of things going on underneath the surface. We've been trading in this 3-week consolidation wedge type pattern, but within these 3 weeks there's been a lot of trading, a lot of things to do, a lot of stocks that have pulled back that were buyable, a lot of tactical trading. Sometimes a bit frustrating because a lot of movement has lacked momentum. But all in all, a lot going on and a lot to like. So first things first, I just want to take a quick look at the S&P, show you where we stand here. If you go to the S&P, we've been talking about it's almost a year anniversary from this outside day back here on October 4th to where we are right here, wedging after a beautiful move since the June 4th lows. If you take a closer look here today, you will see that the wedge is getting closer to complete. We're hovering on this accelerated trend line that's been in place ever since it started to reignite back here, in late July. Okay, that has been a great roadmap leading to where we are right now. Underneath it, the more macro trend, a bit more of a gradual trend that encompasses the 50-day. So one of the things we've been worried about is whether we break this area to get to the 50-day, or do we have to buy up here for a resolution to the upside, getting above 1460 for what could be a move back to 1474 and the highs of the year. So today, a lot of people are like, what's going on in oil? How is oil lower? I don't understand. We've talked about this so many times. I have a link from Bloomberg that I'm going to repost where if you saw on September 17th, that was the day oil told you, be careful, get out of the way, look to see what it leads to. You take a look at the USO, you'll see right here, this was that day, this potent down day in the oil patch, this day that encompassed almost this entire range here. Look at the date here. This is September 17th. Go to the spiders. Let's take a look at September 17th. Okay, September 17th is right here. Look at this little day. Did you see a big down harsh day in the S&P here? No. If you go to oil and you see this huge down day, also not at the highs, not a leadership area, a laggard group that was just rallying back up, to prior resistance. And if you look here, this gap still, in control of this move, and then obviously a lot of resistance going across here in oil. But anyway, that was potent move number one. It couldn't reclaim anything. It broke this trend that was intact since June. Then you have a gap down right here that never got even tested to be filled. So right there, that showed you that there is power to the downside, that this is controlling, that there's pressure here. And you know what? This is good. Not good if you're long oil, which technically it showed you shouldn't be, or some oil stocks, but good for the average, consumer out there and Americans, so to speak. So anyway, here was your move lower, filled the gap, held, bounced back to resistance, and now look at lows here. So now the question is, where can we go? At this point, if you were shorted, it'd be probably a good area to cover a little bit. But you have a few different levels here. This being one of them, this being another. Okay, and then obviously the low of the year, which I'm not anticipating. I think oil is going to catch a bottom somewhere around here. But for now, this was your signal to get out of Dodge. This was your confirmation. Here's your gap, and look where we are now. And I think it's pretty impressive that with oil going down, it's diverging from the markets. People think, oh my goodness, is this a leading indicator? No, people want oil down. Okay, oil lower means more money in the consumer's pocket, so it's almost like a double positive. Stock market goes up, people's 401ks are higher, their 529s, their equities are going up, and oil down, and maybe the gas prices go down, and everyone's still complaining. But anyway, the technician saw it coming, or at least we talked about it here. You want to go to Bloomberg, you'll see it on there as well. Then you want to talk about tactically in Apple. Okay, Apple was on Kramer 2 weeks ago, talked about if it broke 683, I was out. If we broke the 21-day, we can get to the 50-day. Boom, hit the 50-day. Yesterday in the afternoon, turned into a really nice trade. Traded back above the prior low, red dog reversal, 656. Today, traded over yesterday's high, which was another buy price around 666, and we closed at 671. Nice tactical trade. You could have sold here, bought back here, saved yourself $30, or some guys actually got short here. I didn't get short there just because I was just getting out of my longs after a beautiful move from buyable entries here. But anyway, it's rubbing up against the 21-day. It's definitely got some things to prove on a macro sense. Trade it at your own risk. Basically, at this particular point, if it were to start breaking above 674 to 676, I would think that some more shorts would get squeezed. But at this point, great day and a half trade, nice swing trade tactically. 20 points. People say you can't time the market. I say, you know what, you better educate yourself, because there are guys doing it every day within the T3 Live community. As far as Google's concerned, not really resting that much. Came in, what did it do here? It tested the 8-day, basically engulfed that one down day yesterday, and this does seem like it's ready to go and continue, multiple buy prices, in the course of the past few months. Right here was really, your core swing after earnings when it acted well, broke this downtrend. Here, traded above the old highs, and then boom, following the 8-day. LinkedIn woke up a little bit today. Still after this buyable pattern around 110, 112, little choppy in here, but still held the 21-day, which is better than a lot of other things out there. Still hovering. If we were to start getting above 124 and change, perhaps we get some momentum there. Banks still looking good. Still a nice place to go. Goldman Sachs, we use this vehicle many different times. This is when it woke up right around, what is that, September 5th. And then the banks woke up, nice move. Remember, into the day that the market hit 1474, the day the oscillator was plus 60, the day we said take some stuff off. I think I got short Goldman this day and short some of the spiders. And then you had a nice controlled pull in. What did it do? It went below the 21-day, came back above it, Barron's, then upgraded it. And then what did it do today? Consolidated. This looks pretty good. This looks like it's ready to go and continue. So this is a nice tier 1 and should be on the radar, as this wedge could be broken to the upside if the market finally gets going. And this is something to look at. Citigroup actually did it today. Citigroup was a nice trade. It was upgraded today. I did not focus on this, but we talked about it. But this goes to show you how you can have a nice tactical entry. Here was your last wedge type pattern. This one broke to the upside. So maybe JP Morgan does it tomorrow. I would put this on the radar. Remember when this was the day that Goldman Sachs broke out, then JP Morgan joined the next day. Here's a nice pattern above the 21 with the 8, nice and controlled. So if it starts getting above 41.50, it could go. Casinos are just hanging around. I would not say lethargic, but I would say stair-stepping higher. Next time this can go, it's got to go above 47-ish or 47.20, but also looks good. Gold holding higher, okay, holding in front of macro resistance, diverging like we talked about the relationship to see how it develops. Oil lower, gold right holding higher, still above the 8-day, still above the 21-day, right here. So gold bugs. You guys shouldn't be bugging out yet, because you should be happy the way the action's going on. And right now it's pretty strong. I wouldn't say be in full boat, but be on the lookout for a move above 172.70. It's hanging out really well. As far as something like HewlettPackard, I hate to say it, but if you're in this stock, you deserve to lose money. All right, the whole sector that we've talked about, where not to be, the PC sector. Don't be in Dell. Don't be in HewlettPackard. Don't be in a business that is just on the decline. What's on the incline? What? Handheld devices, mobile, not HewlettPackard. Or Dell or some of the other ones, even Microsoft, a little wishy-washy. But anyway, you look at the chart of HPQ, it's been a disaster all year. Okay, look at this, just trending lower. And even to where you see where the market is, hovering up here near the highs, and lots of stock making highs, and this is below every moving average, so far below the 200-day, so nobody wants this. And then today, it just broke the lows, and I hate to say rightly so, but you know what, rightly so. And you shouldn't have been in there. Okay, Dell is gross. Dell, look at this stock, boom, at the lows. Here's your gap down. A lot of people didn't want to sell it because they thought $11 was, too cheap to sell it. But meanwhile, that was your last point of reference. And now you're at 940. What do you do there? Now everyone's going to be, talking about a takeover. That's the only way it's ever going to go higher. Even Intel. When Intel came out, and I think if you come back to me, and they pre-announced, they did it when it was in the low end of the rally, or the low end of the market. If you remember in July we started the move. In August, when the S&P went from, I think, like 1370 to 1440, what did Intel do? Let's take a quick look at the chart first. You can even say the Qs. What did the Qs do? All right, the Qs in August. Here you go. Look, Qs broke out and continued to the highs here in September. Right? Nice move in the Qs. Right? What did Intel do during the same time frame? Here is August. Ooh, Intel went lower. And then it broke below support and couldn't get back above it. And now look where Intel is. Okay, all the chips and all the PCs and all the big box computers, not happening now. Okay, chips and handheld devices maybe are working out, but the semis have been weak. So here you go. The high here in Intel is August 10th. Okay, if you go back to the Qs, okay, August 10th is where? Right around here. Okay, on August 10th, the Qs continue higher. And what does, Intel do on August 10th? Ooh, go lower. Okay, so their stock selection is key. IBM doesn't care about what's going on. Mega cap, from the same family as Intel and HewlettPackard and all those guys from way back when. This is hovering at highs, above the moving averages. Acted well. What did this do in August? August, 10th, right around here. It traded lower, but what held? The 50-day and turned higher. Okay, and went through resistance and then flagged and continued, and who knows? It looks like it can go again. So it's not that easy to make money, but if you use your technicals and you follow the price action and you don't get stubborn and you don't get opinionated, there's the right stocks to be in at the right time. And even Apple, a huge winner, okay, you have to sometimes be tactical. So if you bought above 700, and when every major wirehouse upgraded it to 850 and you sold it when it broke the 50-day versus buying it because you couldn't, think straight anymore, you got out of it. But if you bought it after the earnings when it cleared 580 or cleared 622 or cleared 644, you traded it, maybe sold some above 700 into the excitement, stayed with a little bit, because I also stayed with a little bit, but I said I'm getting out at 683. Nice move, 60 points, that one, 20 points, a lot less than I was holding, and it changed character. So then this way you had the luxury of rebuying it back at the 50. Okay, so obviously you have to know your time frame. You have to know how much you're putting into this, situation. Because I don't call it a game. This is your financial health. It's not a game. This is how you can make money. This is how you can increase your lifestyle. This is how you can make a difference in your life. And not it doesn't always have to be painful. You don't have to be the guy on TV they call the retail investor that buys high, sells low, doesn't know what they're doing, doesn't want to look at the market because they've been so battered and bruised. No. Take some courses. The active trader course, the momentum trader course, the swing trader course that just came out. Go to the super conference that we're doing this weekend where you're going to have like 8-9 speakers that have been doing this for over a decade that can help teach you how to be in the right stocks, right time. Stock selection is key, entries and exits matter, and knowing your time frame is putting it all together. So with that said, hopefully, you're making progress. I think guys in the community, in the chat, they're doing great. The Twitter feed's growing. Unfortunately, I can't give you guys everything all the time. I only have 2 thumbs, and I have to trade, and I have to be on the radio, and I have to go to the media. So if you're watching this on the internet or you're seeing it through Twitter, we do have, a premium product that you should check out online because, guys are starting to learn, have success, and, they're moving forward. And just moving forward is much better than moving backwards. So take the right steps. Scott Redler, T3 Live, the recap. See you tomorrow morning. Have a good night. Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.